Okay, hi everybody. Thank you for coming to my talk. Folks in line, no man should be in a line now. Just come have a sit and spout. We'll listen to stuff. Okay, so my talk is called Bitcoin Disrupts Everything, and that's because Bitcoin is money. Money touches everything, so Bitcoin disrupts everything. I apologize in advance, by the way, guys, for the poor quality of these slides. I made them myself. That much will be obvious to you. They were also transmogrified from Keynote into PowerPoint. They're not going to be good, but I think they're going to be interesting. Let's see how we go. Here's how I'm going to start. I've spoken to a lot of people about Bitcoin over the years. Even at this conference, I think there's a lot of true believers in Bitcoin. We think Bitcoin is going to become the global reserve currency. It's a moral good. It's why we're all here. But I think a lot of us also are squinting. We can't quite see the future clearly. We're a bit blurry. We can only see what's in front of us. And we don't think that Bitcoin is really going to meaningfully change the world, right? Like the power structures that exist, the business models that exist, those will survive, but just somehow the money will be better. I don't believe it. I think it's closer to this. I think Bitcoin literally fixes everything. But at the same time, this is not enough for me. I can't just have this meme and be self-satisfied and walk away. I don't think that merely, eliminating the ability of the money printer to distort prices is what changes and fixes everything. I think that's part of it, but it's not everything. Nor do I believe that Bitcoin is somehow going to usher in a golden age of culture and prosperity and self-sovereignty and anti-authoritarianism. It may do some of those things. I really hope it does, but that alone is not the solution to this full problem. I want to see the names of those dominoes this man is knocking over. I want to know what they're called. I want to know in which order we're building them. I want a roadmap. So this is my roadmap. Again, crafty slide. It may not work out like this. I won't talk about this slide right now. We'll come back to it a few times. But my aim in this talk is I want to convince you how Bitcoin is going to change the world more than just a superficial level. I want to show you how naturally it is going to start disrupting all these industries that you think are so far away right now. Okay, plan for the talk. My central thesis, if I have one, is that Bitcoin is made of markets. Now, I don't just mean that Bitcoin is like a market good or that money competes against money in the market for hodlers. That's all true, but it's not what I mean. I mean that Bitcoin is literally powered by markets. Markets are the most interesting and robust part of Bitcoin. They're what endow it with the properties that we value. Also, I think Bitcoin is more than just markets. I think it's a methodology. It's in its very existence. It teaches us how to replicate the properties that it contains to other domains should we need to do that. I'm going to describe that methodology, and I'm going to talk about why the Lightning Network, I believe, enacts that methodology. I'm then going to talk about why I think payments and networking have to go together and how this can lead to a more market-driven, decentralized, fairer, more transparent, more efficient internet. And I think that really does start to meaningfully change the world in huge ways. I also am not going to be able to get through all of this in the next 15 minutes. I already know that. So I'm going to go real fast. Let's see how far we get, and then we'll pick it up again next year. All right. Okay. So raise your hand if you believe this, right? Bitcoin is energy money. It is made from energy. Bitcoin miners are mining Bitcoins. They're turning computations into the best money in the universe. I used to believe that. I don't believe that anymore. And the reason is, if you believe that, you are also forced to believe this other crazy statement, right? As Bitcoin mining technology gets better over time, we will use more energy to mine fewer Bitcoins. That is perverse. If you don't know anything about Bitcoin, if you're a no-coiner, then all you understand is that Bitcoin miners use energy to make Bitcoin, and then you realize this, what might you think of Bitcoin? You will think it's perverse. So I don't think this is a good way to talk about Bitcoin mining because I don't even think this is what it really is. I think Bitcoin mining is a voluntary market-driven process. Bitcoin miners are not mining Bitcoin at all. They are mining blocks. And they are selling those blocks to the Bitcoin network in exchange for Bitcoin. It is a voluntary exchange. The reason so much energy is used is because the price of Bitcoin, as denominated in computations or energy, is really high because Bitcoin is valuable. If Bitcoin were not valuable, the price would be lower, the amount of energy being used would be lower with something like Bitcoin Cash. So is it really true that Bitcoin are made from energy? Or is it true that Bitcoin are traded for energy? I much prefer the second explanation. I think it's cleaner, it's neater, it shortcuts every environmental objection because it's not actually being used to make them, it's just being traded for them, that's it. I call this layer 0 of the Bitcoin market. There's going to be more layers. This whole conversation is about layers. But let's keep going. Even this first layer already starts to disrupt things in the world. There's huge connections between the Bitcoin mining industry and the global energy industry. Don't listen to me on this. Read some of these people's writings. They're at the conference. You can speak to them. The only point I'll make here is Bitcoin disrupts the energy industry, not because of changes to the money printer or changes in culture. It disrupts the energy industry because it is a unique and novel market. There has never been a consumer like Bitcoin for energy, and that is disruptive. And this is the sense in which Bitcoin changes the world. We create new markets that disrupt existing markets by being novel, interesting, more decentralized, and powerful. This is the idea. I don't have time to get into Nakamoto point. It's cool. You can Google it. Transaction settlement. This is also a market. This is perhaps more clearly a market in the sense that we are declaring prices when we post a transaction settlement. We're putting a bid in sats per VByte. Miners have an asking price that they're going to need that transaction to be at before they're willing to mine it. So it's very clear that this is a market-based process. I like to call this layer 1. This sits on top of layer 0 in my view. And I want to talk about why I distinguish these two things. These are both markets. They both trade in Bitcoin, but I think they have slightly different structure and semantics, and that's why I like to think of them separately. Case in point, at layer 0, I believe layer 0 is a market between aggregates. It is a market between the entire Bitcoin mining industry and the entire Bitcoin network. No individual user or miner is ever setting prices in this market, so it's really between aggregates. Contrast that to layer 1, in which every Bitcoin user declares their own bid whenever they put a transaction into the mempool. Every individual miner, as I said earlier, has their own asking price. That is a market between individuals. Now, the market between individuals at layer 1 needs the market between aggregates at layer 0 to settle, because of course settling blocks is how transactions actually get confirmed. And so we're seeing a coupling between these two markets, even though they're slightly different in their structure. I'll also add, if you think this is like bullshit, that of course these things have to go together, please recognize that for the entire first year of Bitcoin, almost the first 50,000 blocks have almost no transactions of them at all. For the first year of Bitcoin's history, it really was just layer 0. And today, if a miner decides to mine a block with no transactions in it, what are they doing? They're engaging in trade at layer 0, ignoring the economic opportunity at layer 1 for some reason. So these two things really are in some way separate, even though they're very tightly coupled. And I think, oh man, I forgot to say it on the last slide. By the way, in the top right corner, I've got these little blue boxes. I'm making the claim that Bitcoin disrupts everything, so that little blue box in the top right corner is the thing that I'm disrupting on that slide. Previously it was energy, but Bitcoin disrupts money because of its monetary properties, but those monetary properties come from the strength of these markets. We as Bitcoin users have incredibly strong consumer protections. Like, no one can sell us fake hash rate. So as a result, we don't need agencies, regulatory bodies to regulate mining, to make sure that miners are selling us the real deal, to have a regulatory process, inspection, auditing, install CrowdStrike. None of that is necessary. And what that means is that anybody can become a miner. This market is completely open and flat. That means millions of people make that choice. The market grows faster historically than most other markets. Bitcoin mining industry today is huge because of this incredible openness. Continuing on this theme, the network has unsurpassed uptime and availability because of so many people being able to use it. The reason transactions are uncensorable is because some miners always going to want to get paid for settling your transaction. Again, Bitcoin's strongest properties come from the fact that it has strong markets. This is what we must export, not the blockchain or any other kind of ideas like that. Moving forward, I'm talking really fast. You guys keeping up? All right, good. Moving on. Bitcoin is more than just markets. It's an example of a methodology we need to recognize, articulate, and repeat over and over and over again. If I could say it in one line, Bitcoin teaches us, if you want to solve problems, big problems, break them down into small problems that are so small that markets can solve. Because markets are powerful, but they're not smart. We have to be smart, and we have to break the problems down so that markets can solve them. That's why Bitcoin is already broken into two layers, because those are separate problems. Releasing the initial supply of Bitcoin and settling transactions are logically distinct problems, and so we have distinct markets that solve those problems. That's a pattern that's going to repeat. I want to spend a little more time on the slide going through those bullet points, because I'm going to try and touch on them a bunch more times. The first point, that structures at one layer host the goods that are sold at the next layer. That's something that's going to happen over and over again. Come back to layer 0 for me, right? What are the structures at layer 0? They're just blocks. What the blocks contain, basically just a proof of work, and that's it. Again, for the first 50,000 blocks of Bitcoin, that's all it was. But what are transactions? Transactions are data that we put inside of the structure of blocks, and then we sell them in the layer 1 market. That pattern is going to happen again and again. Let's keep going. New markets make existing markets more valuable. Absolutely true. Imagine if Bitcoin really were something that only had layer 0. You can mine Bitcoin, but you can't trade it or exchange it with anybody else. That's useless. That's a collectible. That's not a money, right? We need layer 0 to make we need layer 1 to make layer 0 more valuable, even if layer 1 depends on layer 0. That's a pattern that's also going to repeat. As we build new layers, they're going to make the existing layers more valuable. Let's also talk about order books. Order books are one of the central ideas in markets. Asks and bids fit in an order book. We match orders. We settle orders. The order book at layer 0 is trivial. There is one ask. It is the current market price for Bitcoin as denominated in computations. It changes every 2 weeks. We know that as the difficulty adjustment. That is it. It's one ask. It's a trivial order book. That's what makes it so efficient and capable of doing its job. Let's talk about layer 1. Layer 1 has an order book of approximately 200,000 transactions. So we've already gone from layer 0 to layer 1, orders of magnitude more asks and bids that we have to resolve. Imagine how much bigger that's going to get when we start talking about layer 2, which is Visa scale, or layer 3, which starts to be internet scale. That's going to be billions of asks and bids. How are we going to scale that? Finally, expect as you go through this methodology to solve unexpected problems. At layer 0, we are building a market to release the initial supply of Bitcoin, but we wind up building a clock. At layer 1, we are building a market to settle Bitcoin transactions, but we wind up building a virtual machine. At layer 2, we are building a market to route payments to each other. We are also secretly building a new kind of internet, and I will show you how that works. Finally, I will make a corollary statement. What happens when you don't follow the methodology? What happens when you don't build markets, or the markets you build are too broad and too vague? You will create centralization. That is what happens. Let's look at an example of that, all right? Here's an extended version of the image I just showed you. Let's look at some of the new markets that are adjacent to the ones I just talked about. So there's still layer 0 and layer 1, but there's some... This slide is terrible, I'm sorry. On the right-hand slide, I'm trying to illustrate the notion that individual users interact with Coinbase to trade Bitcoin. There's no market that was built into Bitcoin for trading dollars. Bitcoin can't even talk about dollars. So what happened? Centralized exchanges showed up to solve that problem. Great. What about the left-hand side of this diagram? In the early days of Bitcoin, miners just mined, right? Whatever hash rate fraction they had, that's how many blocks they got. As hash rate exploded by 17 orders of magnitude in the last 15 years, that's no longer sustainable. If that was still the model, every miner would be a lottery miner, getting nothing for months on end and then suddenly winning a block and getting a whole bunch of cash. That's not a sustainable business. So what happened? We didn't build a market inside of Bitcoin to solve this problem. Mining pools show up. Mining pools are centralized entities that trade hash rate with miners to solve this problem. So again, if you don't build the market or you make the market too big, you will create centralization. That is inevitable. That's just what happens. Okay, where do we go from here, right? So this guy, we figured out that money is a set of markets. How do we get to everything? Let's keep going. Here's a way not to do it. Don't blockchain cargo cult, right? The blockchain is not what makes Bitcoin special. It's the strength and power of those markets. People have tried bringing blockchain to a whole bunch of stuff, and it just doesn't work. It's the original sin, if you like, of Ethereum, to think of a world computer as something that you could build using the market structures that were designed merely for Bitcoin's use cases. What happens when you abuse market structures that were designed for a very narrow problem to solve a very general, huge problem of a world computer? You create centralization. That's exactly what happens, right? I think the hilarious part of this is things like Solana are conceived because they realize that, wait a minute, Ethereum, you're wasting so much time in this decentralization theater. I'll just skip all that. Of course, that's what we expect to see. All right, so don't do this because you get centralization. Instead, you got to focus on markets. Markets are really the answer to this. Ooh. All right. So let's keep going. Yeah, we already have Bitcoin. We don't need the blockchain. We don't need to replicate that. We can use Bitcoin as an API to create the incentives that build the markets that we want to create. What's the most important market to work on next? It's the Lightning Network. Why? Because we need to scale payments. Not only does scaling payments mean that billions of people could potentially use Bitcoin, scaling payments is the way that we will build economic incentives to drive other markets. This has to be the first problem we solve. So there's a picture of a Lightning channel. It's a tube with money in it. We're connected. We route the money through the tubes. All great. But ignore the technology for a bit. Ignore the structures. Focus instead on the market principles. I think there's lots of node software. There's lots of client wallet software. But the most interesting projects in the Lightning Network, in my view, are the marketplaces, right? Lightning Loop, Lightning Pool, Ambos has a Magma project. These are not huge like successes yet. It's still very early. But if the Lightning Network is really going to scale, it will be because these markets allow us to efficiently trade channels, inbound and outbound liquidity with each other. I'll also make the comment that I forgot to make them. Lightning is very much practicing the methodology. Channel is essentially a UTXO. We're taking a data structure at a lower layer, and we're deciding to sell it to each other, not because it's got Bitcoin in it, but because it's a channel. Again, that's part of the methodology. The order book for all these trades is not on the blockchain. It's somewhere else. It's off-chain because it's huge. It's the size of all payments that can ever happen in the world. Routing. Today, we source route in Lightning. Like everybody has to know the entire state of the entire topology of the network. That's not scalable. The internet looked like that in the 80s. Not by the 2000s. It was too big. We're going to have to solve that problem. How are we going to solve it? We're going to solve it with a market. The knowledge of the topology of the Lightning Network is valuable. We can buy and sell that data to each other, and that's how we're going to scale as well. So what does the right market for payments look like? It means fast. Sorry, I'm just checking my time here. Okay, we're good. It means fast, cheap, secure, scalable, massive payments. If that happens, expect the world to change in meaningful ways. We will start selling things that you're not allowed where you can't sell today. So we're starting to see my little diagram. I'm drawing you some of the dominoes. We're starting at layer 0. We're disrupting energy. We're disrupting money. Layer 2 shows up. Again, markets, exchanging channels, liquidity. We're disrupting payments. Where do we go from here? What happens next? Well, let's think about this. Lightning is also a communication network. It's not just a payments network. When payments are routed in Lightning, they're routed through something called an onion network, onion routed network. This is a privacy-preserving tool that was created long before Bitcoin. The concept of the onion network is old. But guess what? There are more Lightning nodes today than there are Tor nodes. That means Lightning is in many ways a more successful private internet than even Tor. Why is that? Because you don't get paid to run Tor nodes, and you get paid to run Lightning nodes, so there are more of them. Now, today, the Tor network within Lightning is not being used to route that much data. It's largely being used for payments, but that is something that can change over time. In particular, I think this is a really important idea. The internet today works according to the principle of we put payments, when present, inside of data. Everything is data, it's HTTP requests, and there may or may not be payment inside of it. Lightning flips this, right? Everything is a payment. The payment may contain data inside of it. Again, this is the methodology, right? We're taking a structure at one layer, layer 2, we're deciding to put data into that structure, and then we're going to sell that data to each other. This is not happening at scale yet. Sphinx is maybe one of the projects that's trying to do this, but there's no reason this can't start to happen at massive scale. We can totally just, and why is that important, by the way? It's important to do this because allowing payments, it changes so much about the internet. Spam becomes easier to deal with, right? DDoS is impossible because everything is being paid for. Look at this homepage. This is a travesty. This is the most popular news website on the planet, news.yahoo.com. Look at that garbage. You know, why are they sending me political articles I don't care about, advertisements that I'm not going to buy? I stopped wearing heels years ago. Why is it being advertised to me? More importantly, look at the middle line. That page took 16 seconds to load. There were 500 network requests and 15 megabytes of data went back and forth. Why? If I was paying for that in Bitcoin, would I be going to news.yahoo.com? Maybe that's a good thing. I'll close, because I know I'm getting to it. Give me 2 minutes. I'll close by going a little further. Right now, the data that we're setting in the Lightning Network is minimal. There's not a lot of data being routed, but imagine that there were. Right? The Lightning Network is private. It's the perfect arena in which to pirate information. I'm not going to sit up here and say that like piracy is something I'm directly supporting, but let's just say I was in college during the silver age of piracy, if you like it, with the rise of peer-to-peer file sharing software, many of which, by the way, those ideas are in Bitcoin right now. What happened in the silver age? Why did it end? It ended because the internet is centralized. It's run by ISPs, and telecoms. We felt pressure from the intellectual property holders to serve DMCA takedown notices to me and my friends when I was a young man. Can you tell I'm still bitter? What happens when Lightning gets involved here? The thing I'm showing you on the right-hand side there, that's a picture of the Plex interface. If you've never heard of Plex, Plex is open source Netflix. It's something that you use to like power a Netflix-like experience for your own private movie library, which of course you should have the digital rights to, but you don't need to. Well, I think we're like a year away, 2 years away from someone figuring out that you can couple Plex to the Lightning Network and create an incredibly profitable business selling things you shouldn't be selling. And this will be unstoppable. It won't be like the Silver Age. It will become a new golden age of piracy because there will be no way to track who's doing what. This meaningfully changes the concept of intellectual property. Intellectual property only survives when it can be defended. If it cannot be defended, it will cease to exist. All right, let's take one more idea and then I got to close. Remember, bits can move atoms, right? Economic incentives that are built out of digital things can change physical things in the world, right? It took 30 years to deploy networking equipment in every house and school and factory and business across America between 1980 and let's say 2010. It took 15 years for Bitcoin to become an industry large enough that it consumes 1% of the world's electricity. How long will it take us to start putting mesh networking tools out there that people get paid to run, to operate? I don't know that much about Go10. I don't know how successful they are, but I love this quote about them. Any node can earn a reward for relaying data for others and being at the right place at the right time. We're saying let's use markets to build new mesh networking telecom layers. Right now they're focused on military deployments, festivals, rural areas, but there's no reason this can't be the predominant model for how people connect to a new kind of internet that is for pay. So I have to kind of stop here because I'm kind of reaching my point. There was more I wanted to say. believe it or not. Maybe we'll do that next year, and I'll kind of walk you through the rest of this slide. Thanks, y'all.
Thanks,